Welcome to Intesa Sanpaolo On Air, the English Language Insight series jointly hosted by Intesa Sanpaolo and the University of Oxford, where we embark on global conversations with global leaders. My name is Rupert Younger, and in this episode, we explore what's happening in the world of finance, and in particular, what we as customers expect to see that's new and exciting in 2025. Financial technology, or fintech, represents a really exciting fusion of finance and technology, revolutionising how we will all use financial services in our day-to-day personal and professional lives. According to market data forecast, the global fintech market is expected to grow from just over 200 billion in 2024 to over 640 billion by 2029. That's the next 5 years, so a tripling of the size of the market in the next 5 years. Many different factors underpin this forecast, not least advancements in digital payments, blockchain, and of course, the immense power of AI. Finance innovations in 2025 are expected to come in different forms, from mobile banking and cryptocurrency to peer-to-peer lending and service offer bundlings. Expect greater efficiency, reducing the time and cost associated with traditional financial transactions. Expect better security measures such as blockchain and biometric verification. And expect more convenience in mobile banking and digital wallets. And all of this also offers a very important opportunity to improve financial inclusion. So, this is a really exciting time to be in the world of finance, and who better to decode what's in store than two titans of the industry. Professor Pinar Ozcan is a Professor of Entrepreneurship and Innovation at the University of Oxford and founder and director of the Oxford FinTech Research Initiative. And she's also an advisor to the Bank of England and the OECD. Welcome, Pinar.
Thank you so much for having me.
Bob Wigley is Chairman of UK Finance, a trade body for the UK's financial services industry, representing 300 leading firms in the sector. He's also a very experienced finance professional, having worked in investment banking for most of his career, latterly as chair of Merrill Lynch in Europe, Middle East and Africa, before broadening out his portfolio as a non-executive director, investor and advisor to governments on financial matters. He is also a visiting professor at the Digital Futures Institute at King's College, London. Now, Bob, seeing as I've ended with you, let me start with you, if I may. You've been travelling the world, speaking about what's happening in the world of finance, and in particular, what we can expect in terms of trends and innovations over the last year. Give us the kind of cut-down starting point as to what you've been telling everyone.
Well, I'm very positive, Rupert, about the future of the financial services sector, and that's really for, I guess, three reasons. The first is what I call past peak regulation. Since the global financial crisis, we've rightly had a significant tightening of regulations on banks around the amount of capital they have to keep, the liquidity they have to keep, and the conduct that they have to pursue. But I think there is a feeling amongst governments who are now keen to stimulate growth to help repay the debt they built up during COVID. That maybe this regulation has gone a little far and it's time for a reset. And the expression I like to use is rebalancing regulation for growth. So this is not some massive rollback of regulation. It's not a race to the bottom. It's simply saying, when you add up everything that's happened since the crisis, is it all really necessary? And how can we make sensible, measured rollbacks that actually improve the ability to banks to help people, help families and help businesses, and ultimately provide the capital for growth in economies. So I think you are going to see some rebalancing of regulation for growth. That's the first thing, and that will be good for banks. And if you just look at what's happened to US bank share prices since Trump won the presidency, they very significantly increased, and that is on the back of an expectation that he will support this agenda, and probably that the US won't implement Basel III, which is a tightening of capital regulation.
And interestingly, I guess in the US also, is it fair to say that Elon Musk, who's started in fintech, of course, at PayPal, that he will also be pro that deregulatory agenda?
Yes, I think that's a racing assumption. Yeah, good assumption. So that's the first trend, I think, rebalancing regulation for growth. I think the second one is what I call the second phase of digitization. So the first phase saw people move away from cash to using mobile apps and stopping visiting branches and doing their banking through their smartphones. And they have a form of or digital money today in their banking wallet on their phone. But the really interesting, I think, thing that has happened is that as crypto has become more popular, people have got used to the idea of tokens. And of course, today, these tokens mainly are tokens, or they're crypto tokens, which don't really have any substantive asset behind them. The exciting opportunity is if you start to tokenize real world assets, if you start to tokenize real estate, even deposits, equities, bonds. And if you think about it, if you add up the entire market cap of cryptocurrencies in the world, it's under 2% of the value of the global equity market, or under 2% of the value of the global debt market. So this is a massive opportunity. And it's somewhere I think the UK, incidentally, can really lead the world, because although Trump is strong on crypto, the concern over privacy in the US, which means that they will not be keen to implement electronic identity, which you kind of need to have if you're going to have a CBDC, and we'll come back to CBDCs later, I know, means that I don't think we're going to see digital tokenization taken off in the States for quite some time. Now, that gives London a massive opportunity to steal a march, and I'm pushing the UK government very hard to issue a digital gilt here, to work rapidly on the sandbox that's currently in place, where we're testing digital assets and digital tokenization, and then create the best regulation in the world here for digital assets. So that's a very exciting sort of mega opportunity. I think the third one is green finance. We all know that this is a massive issue around the world. We need to green our economies. If I just give you one example to give you a sort of feel for the scale of this, we have 20 million houses in the UK which need retrofitting with insulation and a move away from gas boilers to air source pumps, that kind of activity. That is forecast, those 20 million homes, that the expenditure required is about £500 billion. And that's just one, is probably 20% of the total amount of money that's needed to green our economy. So I think those three trends, a rebalancing of regulation for growth, the second phase of digitalization and digital assets, and then green finance, are massive tailwinds for the industry that can really propel our growth over the next 5 to 10 years.
Is it fair to say that this is one of the periods where you're seeing most change and most opportunity in your professional career? Or
Never seen more. I think it's all happening in payments. I include in that digital tokenization. I think you're going to see more change in the next 5 to 10 years than I've seen in my entire business career so far. It is utterly transformational.
Wow. Well, that, of course, is a perfect area for leading scholars and researchers to pick up on. Pinar, do you agree? Is this a period of dramatic opportunity and change? And what are you seeing?
I think it is a very exciting period. There's so much happening. Fintechs are exploring all sorts of technologies in order to make products faster, better, cheaper. And one of the things that I'm super excited about is to see how AI is now being used in the field of finance. Now, finance being a field that is both knowledge intensive, but at the same time sensitive assets, sensitive data, it's not easy to embark on a journey with AI in finance. But we're finally getting there, and some amazing fintechs are exploring these opportunities by looking at financial data with the help of regulations such as open banking and open finance, and really trying to see how we can move from just being able to reach efficiencies through faster and cheaper processes, but also trying to create more value for customers by using Gen AI to create tailor-made portfolios for investment or retirement or tailor-made loans. There's just some amazing opportunities, and the fact that they're out there now is putting lots of pressure on existing large financial institutions, and I'd like to see that. The other thing that I see, which Bob also touched upon, is a rise in the conversation and activity in digital currencies. And through my work with the Bank of England, I've had an opportunity to look at what the rest of the world is doing as well when it comes to digital currencies. And the digital currency journey is not new. We've actually met some of the actors that want to play in that field with the rise of Libra and the subsequent fall of Libra. But I think that...
Just explain briefly what Libra was for...
So Libra was a digital currency attempt from Facebook back then.
Of course.
And but what's interesting is that got stopped, and part of what was going on there, at least, was that it really spooked the governments that big tech was going to come and take away government's power in monetary policy. But of course, that pressure has never gone away. And we're now in an interesting time where a lot of governments are playing with digital currencies, central bank-based digital currencies, and there's lots of pressure. And it's going to be interesting to see whether stable coins or CBDCs actually move faster. Obviously, the industry now also with political changes is pushing for stable coins, and I think that it's going to be now coming for good. And I'm interested to see how central banks are going to respond to this.
So let's pick up on central banks, because that's a perfect way to start. Your work at the Bank of England is focused on, as I understand it, the Bank of England potentially introducing its own digital currency, a Bank of England digital currency. Tell us what it is and how's it going to work, and what will we be able to do as consumers?
So a central bank-based digital currency is a digital currency where it's issued by the central bank, and in a sense, it builds a new ecosystem in the financial sector where the central bank is not just a regulator, but it actually comes in as an orchestrator for an innovation ecosystem. So
what does that mean, an orchestrator for an innovation ecosystem?
It means that there's a new technology that needs to be used, and tech players are part of it. But in a sense, the central bank needs to organize the way that it's going to work, and it needs to not just involve, banks. And if it's a retail CBDC, there are two types. There's retail and wholesale. If it's a retail CBDC, meaning that citizens like you and me are going to use it, then it
so
means
we could pay for something with something called a Bank of England token, a Bank of England digital token. Digital pound. That would be called the digital pound, yeah.
Yeah, digital pound, digital euro.
Why would I do that when I've got my own digital pound in my wallet with my current banking groups?
See, that's a very good question, because I think that the main motivation to issue a digital currency really is different for a developing country versus a developed country. In a developing country setting, especially in places like island states where cash is actually difficult to deal with, or if there's lots of corruption, then issuing digital currency is actually a very good thing. It's not just cost efficiency, it's actually making the financial system more robust and safer. But in a developed country setting, it is about just gaining more efficiencies. However, the implementation is actually so painful that it might not be worth it. And that's why I think we see in the developed country setting, we see a lot of second mover advantage. People waiting for someone else to do it first and then either fail or win, and then they're going to come in and do it. So there's going to be an interesting situation of waiting around.
Bob?
So in answer to your question about what's the difference, the key advantage of a digital currency is that you can attach a smart contract to it. So let me give you a very practical example. You're moving house. Today, you have to transfer the money that you're using to pay for that house to your solicitor, who then transfers it to the solicitor on the other side, and then ultimately it goes to the vendor. In the future, what will happen is that you'll have a smart contract which will say, as soon as the following conditions are met, transfer the money from Mr. Younger's account to Mr. Wigley's account. So it's basically it's basically the ability to apply a smart contract to a particular piece of currency. That's the key benefit.
Right. And why does that have to be a central bank role rather than a financial institution role?
It doesn't.
It doesn't.
So I think Pinar nailed it really when she said that the central banks got spooked. So when they could see that crypto was taking hold and that indeed big tech might issue its own currencies, they began to worry about how, if this took hold globally, it might impact their ability to use interest rates to control monetary policy, And so there is, in a sense, a sort of war between the decentralists, the crypto kingdom, and the central bankers. And the central banks have worked out the way to deal with that is to create their own digital currencies.
So this is a defensive move.
It is partly defensive, but it also has some consumer benefits, as I said.
It also, I'm assuming that these digitization strategies are also problematic in lots of ways, because not everyone is digitally connected, digitally enabled, or digitally literate.
Funny enough, the opposite is the case, I would say. If you look at India, where they have introduced something called Aadhaar, which is basically electronic identity. So they have identified 1.2 billion people. One of the problems of access to banking services is not being able to prove who you are. And if you live in a hut in Africa, you don't have an address, you don't have utility bills. It's quite difficult sometimes to prove who you are and where you live. Once the government has electronically identified you and you've got it on your mobile phone, you then have access to banking services and indeed mobile phone contracts, e-commerce. And in India, this meant that 550 million people who'd never had a bank account before opened one. And if you just think about the economic empowerment implications of suddenly being able to have a mobile phone contract instead of pay as you go, being able to sign up with an e-commerce service, 550 million people, it's no wonder that India is going to have 8% GDP growth for the foreseeable future.
Pinar, you agree?
I completely agree. And I think that if CBDCs were issued in a way where they only worked if you were online, then we would have a big problem and it would really amplify the digital divide. And however, luckily, there are technologies that enable you to make payments when you're completely offline. And so that is going to be the way to do it. And I also completely agree that digital identity is perhaps going to come even sooner than CBDCs into our lives.
Good. Well, I want to come back to digital identity because that raises some questions of risks too. I'm assuming that also the commercial banks will themselves also be issuing a lot of digital or tokenized or cryptocurrency products. Is that fair to say or not?
So stablecoins are really what you're talking about.
Yeah.
I think myself that we will see a bigger rise in stablecoins in the US because we're not going to see a central bank digital currency for quite a while there.
Right.
So therefore, stablecoins, which I regard as a sort of an unnecessary interim step between crypto and the real thing, which is the central bank digital currency, I don't think that'll take hold in the UK because I think we will have a CBDC relatively quickly.
Right. Okay. So the other sort of area, just before we get to innovations that I want to ask you about, is who's going to win this battle for your digital wallet? Is it the tech companies or the banks?
I think that if you ask, so in the East, the big tech has won. Right? You do everything on a big tech platform. It's a one-stop shop. One of my Chinese students last year said that her sister even got divorced on WeChat. You can even do legal things there now. It's crazy. But, if you've visited, you literally cannot live without being on Alipay or WeChat. So they're, a combination of a young and digitally savvy population and a laissez-faire approach from the government has enabled big tech to really dominate life. I think that we are slowly going towards that future, but we're not going to entirely get there because regulators are going to not allow that to happen. But I think it's undeniable that the likes of Google and Amazon and Meta are going to take whatever makes sense for their business model within finance. So if you think about Google actually invests quite a bit into digital banks around the world. Why do they do that? Access to data. It makes sense for their business model. Whereas Meta has the highest number of e-money licenses around the world because there are more WhatsApp and Instagram and Facebook accounts than bank accounts around the world. So they have a real opportunity to enable peer-to-peer payments and let people bypass banks and just go directly to big tech as their bank. So I very much think that the entry of big tech into the financial sector is undeniable. Also, if you think about the way that cloud services are now being provided by the likes of Google and Amazon. And so with that, they're going to pick and choose what they'd like to do there, but never become a bank because that's just not profitable for them.
And of course, we already have Apple Pay and all of these type of innovations. Bob, Do you agree that the big tech's going to be the winner?
Well, and about the winner, it's clear that big tech is moving more and more into banking services. But the difference, I think, between the West and you're really talking about China, is that we will not have quite such a laissez-faire approach to regulation. So the narrative which my industry uses is a little expression that says same activity, same risk, same regulation. In other words, if you're Amazon and you want to be in the banking business, then you have to be regulated like a bank. And of course, there are shades of grey between payments and full deposit-taking banking services. But we are certainly pushing governments all around the world to apply the same kind of thinking to big tech as they apply to banks if they are in banking services.
Right. Brilliant. Now, let's move it on to the innovations that we can expect to see. So in terms of you and I, all of us as individuals, what's going to be new and different? What are we going to see that's different in the way we use our financial services, industries and products? Pinar, why don't I come to you first?
Sure. I think that one of the biggest trends right now is the way that financial services are starting to be embedded into our lives, what we call embedded finance. And what that means is that as data from different industries are starting to be combined, again, through regulations such as open banking, open finance, which are now also kind of moving forward in other industries, what we're going to see, and what we start to see, is that if you're thinking about an education, if you're thinking about getting a surgery, whatever it is, finances are going to be dealt with right then and there through integration of your financial data with that service. And that's something that we're starting to see more and more of. And, at Oxford, through our accelerator, we see a lot of fintechs coming in with those ideas of combining data in order to create more tailor-made services for our lives using financial data. So that's one. And then the other, of course, which is related, is the use of AI, which is really starting to be quite common now.
Is that going to be in bots, customer bots, and sort of more advanced interaction technologies, or is it going to be something more fundamental than that?
I think bots are yesterday's news. I mean, everybody's doing them. And, first they were really not that good. And now they're starting to become a little bit better. But what's really exciting is financial services that are tailor-made and generated just for me. And if I don't fit the standard boxes of a bank because I'm either a gig worker or I've lived in many countries and therefore, my pensions cannot be combined, all of these different kinds of people now will have an opportunity to get the financial services that they deserve because AI can generate it for them. And data can be combined very easily by AI, and risk factors can be calculated much more easily. So that to me is the real excitement.
And that offers a chance, obviously, for fairer banking, where you can be treated as an individual rather than a group of individuals.
Exactly. Particularly when it comes to financial inclusion, it will make a huge difference because then if you don't fit that box, then you still will get services.
Right. And AI, just to finish on AI, I'm assuming that AI will also act as an efficiency accelerator too. So you'll be able to do things faster, easier, quicker, less friction in the system. Is that true?
Yes, and I think that's the low-hanging fruit. So what that means is that if you're able to do things faster and cheaper, that means that you can actually give services to more people per time or per pound. But then if you go one step forward, then you can say, okay, now I've reached some efficiencies. How do I also generate new value? How do I provide things that I used to not provide because I didn't have the opportunity?
Bob?
I would add one extra word to your list of things that AI is going to do, which is potentially make the banking system safer. So I'll give you a couple of examples. Today, we can use what's called synthetic data to run through banking systems and train those systems to see fraud as it's happening so that fraud can be detected and prevented rather than allowed to exist. So that's one good example of AI being used to make the banking system safer. I would say another is we can install a program on your mobile phone that knows how you pick up the phone, what angle you hold it at, which finger you type the keyboard with. And if you suddenly do something which is not what you normally do, it probably isn't you operating the keyboard, and that will stop you getting into your bank account, that kind of activity.
Very clever. So actually, in terms of what we might start to see different as consumers, we might see enhanced fraud detection software,
Correct.
the ability for us to feel safer in the way we use our technology online.
Correct.
Both of you, just a comment on privacy.
Before we get to privacy, just two thoughts on what Bob just said. I think that the combination of different types of data within finance is really exciting. Datafication, as we call it, is not just about the fact that we have more data, but it's all about having different kinds of data, the angle at which you hold your phone, when do you log in, and what kinds of things you do. And the combination of behavioral science and data science is really exciting when it comes to being able to understand consumers better and also give them better services. On the safety side, I think there's an interesting battle here. AI is making systems safer. It's detecting fraud a lot easier. At the same time, there's in the background the rise of quantum computing. And quantum is going to potentially shake up the safety and resilience of systems as well. So that's an exciting time to see how banks are starting to pay attention to quantum computing at the same time.
So to bring that to life, just think about a CBDC. Where you can have millions of people instantly transferring money around the place, and when I say instantly, I mean literally there and then. We need to make sure, as I say, that when you're building in atomic settlement potential, you're not also building an atomic bomb. Because if you think back to recent crises, the global financial crisis, the internet deposits in London all disappeared to double in the afternoon. The Irish decided to guarantee their banks because suddenly you had a choice of a non-guaranteed bank or a guaranteed bank. In the SVB recent collapse, similarly, people took money out of deposits at that bank very quickly through the internet. So we only think carefully about with CBDCs about how we control that situation. On privacy, as you would expect, I have quite strong views about this. I am not a buyer of the concern that states know too much about us, and I'm going to give you a very practical example of how you could deal with it. So the fact is, today Google and Meta know far more about you than the government has any interest in knowing. If you think about it, GCHQ and MI5 probably employ less than 10,000 people between them. The idea that they could track the momentary activities of a population of 70 million people is honestly laughable. They haven't got the resource to do the job they are doing, which is protect us from counterterrorism and other such things. So I'm not a buyer of the privacy issue. But anyway, you can protect. So if you look at what Estonia has done, they have identified their population electronically. It's a small population. It's under 2 million people, I think, from memory. But what they have is a citizen portal, so which you can go and examine, and you can see who in the government's been looking at your data anytime you like. So if you're an official and you work for the government and you wish to look at Mr. Younger's data, you have to sign on to the government system with your electronic identity. The system records the fact that you have accessed Mr. Younger's data, and it records immutably the fact that has happened and what data was looked at. You have to explain why you've looked at it. So when I went to the e-government centre in Estonia, the man running it showed me his citizen portal. He went down a list of items that had happened to him over the last 12 months. He said, look, that's me being stopped for speeding. That's the policeman looking at my online driving licence. That is me filing my VAT return. That's the VAT inspector looking at my business accounts. That's me making a hospital appointment. That's the doctor looking at my medical records. I have no problem with any of that. But it's completely transparent. It's actually exactly what blockchain was invented for. It's probably the best scale application of blockchain in the world that I've seen. It's unavoidable, it's immutable, and it's transparent. It's perfect.
And you think that's the future?
I do. I think we should have it in this country. I mean, I think Estonia reckon that they took between 2 and 3% of GDP out of government running costs when they implemented EID. It's the benefits are huge.
Pinar?
I completely agree. And what Bob is emphasizing there is also an easy way for people to understand their level of privacy. To what extent are they sharing data willingly versus unwillingly? And there, I think, especially within finance, the role of education and awareness is great. And this is something that I think about a lot because, in a sense, financial education falls through the cracks when it comes to governments. And large institutions, at least for many decades, made money from the small print. So educating customers was not necessarily top of their agenda. Some fintechs and some NGOs really cared about education, but they don't have the resources. So how do we make sure that especially in the future with AI, how do we make sure that we're aware of how much data we're sharing and what privacy levels we prefer, and how do we implement that? Those things need to be very user-friendly, and we're not there yet in this country.
So is this a boon for fraudsters, being able to hack into these systems and see all the information which your Estonian colleague showed you? And does that risk maybe even more uncertainty or security breaches in our financial architecture? After all, banks now rely on data being given to them as verification checks. And if I can get access to your Estonian colleague's transactions, surely I'm going to be more able to get into his systems.
I think that's just an argument for having to have very robust cyber defense,
right.
And I don't think it'll make any difference. It's the short answer. I think we just have to be very careful about how we build these systems to make sure they can't be hacked,
right?
Or that hacking is at a minimum.
Tackle that cause rather than try and.
By the way, no coincidence that Estonia is also one of the centres in the world who is top of cyber defense.
Yeah,
they actually consult with governments all over the world on how to build the best cyber defense.
Pinar?
Absolutely agree, and I think that we do have technologies now. The way that you can use blockchain, for example, in this context is very interesting, and it's not thinking that if we centralize everything, we're going to be much more vulnerable. Is not going to work, because if you don't centralize, you also cannot use the data. How will you, this is one of the first things that banks have to think about today. Their data for decades have been siloed. In order to run any AI model, they need to centralize that data. And they're like, what do we do now? The argument that centralization is going to make you more vulnerable is just not going to work for the future.
Fascinating stuff. In a couple of words each, what are you most excited about for 2025 when it comes to the world of your money?
Digital tokenization. We want to make real strides this year and push the UK ahead and make it the world leader.
And it's got the potential to be a world leader.
100%. It's. I mean, all the American investment banks are saying it isn't going to happen in America. So the next best place is London.
Great. Pinar?
I'm going to say financial wellness and education, particularly using tech, being able to tell everyone how to run their finances better, be healthier, learn how to save, and doing that using technology such that we can reach everyone.
Well, you've heard it here first. Thank you so much to our brilliant experts, Bob Wigley from UK Finance and Pinar Ozcan from the University of Oxford. Thank you both so much, and we'll be back with the next episode soon. Many thanks.